Let's get more reaction to Citi with Gerard Cassidy. He is an analyst with RBC Capital Markets. And Gerard, great for you to join us. And after having gone through these numbers and hearing what's being said so far in the conference call, I want to just get your take overall on Citi. What do the results tell you about where Citigroup is headed?
I think this is a very pivotal quarter for the company when we consider the last 18 months of what the company has gone through and the condition they were in at the beginning of the year. These results are a very meaningful improvement from those levels that we saw a year ago. That being said, they still have a lot of work to do as they go forward on both on the credit side, but also on the revenue side. But when you look at these results and compare them to where this company was at the beginning of 2009, there's been very meaningful improvement for this company.
Gerard, you mentioned there's still work to do. This is an example of a bank that has repaid TARP and still has a lot of question marks. You cover all sorts of regional banks, banks that have not yet attempted to repay their TARP. What will their takeaway be looking at these Citi results today?
I think when we look at the Citi results, what's really important, as it was pointed out earlier in the interview, that this company has tremendous capital. Their capital levels are amongst the highest in the country right now, which is a really positive sign for the company. Where some of the regional banks who haven't paid back TARP, they may have to raise some common equity to pay it back later this year. But I'd also point out that I think the TARP repayments by Citigroup at the end of last year, Bank of America and Wells Fargo were more driven by the politics than the true fundamentals, because everybody wanted to focus on the compensation, and those companies were most affected by that versus the regional banks, because the regional banks tell us today there's no pressure on them to pay back TARP, and we don't expect them to pay it back anytime soon.
Hey, Gerard, speaking of TARP, they lost 33 cents net. If you take out the TARP repayment, they still would have lost about 6 cents, in other words, on an operating basis. So at what point does the company make money, either on an operating basis or net?
No, you bring up a real good point. They still lost money. I think this year they will turn profitable on an operating basis as the credit provisions start to fall. What was interesting here, one of the key numbers is the non-performing assets. And when you look at their total non-performing assets, they're still very high relative to total loans at about 5.4%. But the rate of growth has slowed down dramatically. And as the U.S. economy recovers, you're going to see all banks, including Citigroup, see a much better outlook for credit problems. And we expect credit problems for the industry to peak in the first or second quarter of this year.
Right, and that's certainly something very key to watch with Citigroup. Gerard, very quickly, though, what is the one question or questions that is still unanswered for you at Citigroup?
I would say that the real question now is, how do you get the revenue growth to come back? This company has obviously gone through hell, and now the question is, how do they get people motivated to grow revenues at this organization? And once they can start to show good revenue growth, that's the key question.
Okay, Gerard, thanks so much for joining us.